Genesis Minerals is an emerging mid-tier Australian gold producer focused on consolidating and developing high-quality gold assets in Western Australia. The company has consolidated regionally in the eastern goldfields of WA and has several gold deposits in its stable, including Gwalia, one of Australia's oldest, deepest, high-grade mine. The company's growth strategy has been focused on optimizing operations and driving scale efficiencies across the region. We think the current macro backdrop is structurally supportive for gold. Persistent global fiscal deficits, de-dollarization trends among central banks, a weaker USD, and ongoing geopolitical instability all support increased demand for gold as a store of value. In this context, Australian gold miners look increasingly attractive, especially now that cost inflation, while still high, has begun to moderate, setting the stage for margin expansion across the sector. With gold breaking through all-time highs, we believe Australian producers are entering a strong free cash flow growth cycle. Within the Australian gold miners, Genesis stood out to us for three reasons: the quality and flexibility of its asset base, the strength of its management team, and its clean, well-funded balance sheet. When Genesis first presented its 10-year outlook at its strategy day last year, it laid out a strong, fully funded production growth profile supported by 2 plants, a large, underappreciated resource portfolio with 8 to 10 different mining areas, and a significant stockpile. Gold production was set to triple to 325,000 ounces per annum over the next 5 years. This is important as stronger production, either through higher mill throughput or higher grade, a measure of gold concentration in a deposit, lowers the operating cost per ounce and improves margins. Since then, the company successfully restarted its second mill earlier than planned and has upgraded its FY25 guidance. Favourable exploration in the region and bolt-on acquisitions increasingly supports the potential for mill expansions, which could provide significant operational cost savings, improve margins, and grow production even beyond the company's aspirational outlook to 400,000 ounces per annum. Indeed, we think there is a potential for a blue sky scenario of 500,000 ounces if successful exploration continues in the region and there is more consolidation. Given the complexity of operating mining assets, we typically look for strong management teams with good operating track record. Genesis management team has developed a long history of under-promising and over-delivering, with the CEO having built his reputation turning Saracen into the growth engine that was merged with Northern Star. On top of this, Genesis is debt-free and completely unhedged. We see it as a high-quality way to gain exposure to a rising gold price over a multi-year period. Australian gold producers have had a strong run year to date, with a basket of the key small to mid-cap players having gone up over 60%, helped by the gold price having moved up 25% in US dollar terms. Given the run, we have continued to actively manage our position. Genesis has been a strong outperformer over the longer-term 2 to 3 year view, but has lagged peers more recently as generalist investors have increasingly broadened exposure into smaller, more speculative gold names which provide more torque in a rising market. Looking ahead, we think Genesis is well placed to benefit from both a supportive gold backdrop and strong company fundamentals.